Chris Sorensen, founder of Help. I want you to understand what ratios are. So what are ratios? We've heard this a lot, and this is very critical with respect to your income and expense declaration. Understand the motivation of why you're watching this video. Many of you out there, in fact millions of you out there, are contacting your lender direct. You were told to, and you get that recorded message that says, please be advised, we are collecting a debt. In essence, whatever you say can and will be used against you. I want you to know, as your advocate, stop it. Stop calling your lender directly. You need a HUD-approved counselor at no cost to you to assist you. I'm going to make you more discerning. I'm going to make you a better educated professional as well as a consumer, so you know how to connect to the right HUD counselor. But when you do your income and expense declaration, one of the things that's going to occur is they're going to run ratios. They're going to take the income that you provide them, and you don't know how to determine your own income. You think you do. And the person on the phone is going to be reading a script, and they're going to say, let's go over your income. Well, what's going to happen is eventually it's going to get to somebody at my level, and I'm going to look at your ratios, and I'm going to determine that they didn't factor the income properly. We'll talk about that in another video, but let's get to the definition of what a ratio is. There are two of them. There's the front end and there's the back end. Your front end is defined as your principal and interest payment on your loan, not the payment you're necessarily making, because some of you are making interest-only payments. Some of you have option arm loans where you're making a minimum payment. A professional needs to determine what's called your fully indexed rate, or what your fully amortized payment is. You can't do this on your own in most cases. So once we determine what your principal and interest payment is, your taxes, any bonds associated with your property, insurance, homeowners association dues, private mortgage insurance premium for an FHA loan. Everybody's got their finger in the pie, don't they? We're going to add up your complete housing expense and divide that in or by your gross earnings. That is a percentage, and that is your front end. That shouldn't be more than 28 to 30%. And if you're over 31%, that by definition will allow you to qualify for a home affordable modification program, potentially. If you're at 31 or below and you're still having troubles, it's not your home that's the problem. It's your other obligations. Well, what are those? Your back-end ratio is that same housing expense plus all other obligations. And we define those in the industry as the minimum payments on your Visa and MasterCards, Home Depot, your Chevron card, etc. You get the idea. A credit card, we take the minimum payment required only. We also add up your installment debt. For you, that's going to be your car payment, maybe a student loan payment. I always joke that when I'm teaching in California, you got to factor in your child support and alimony. They've got a lot of that. And we also have to add up any other debts that may not typically be counted, but we're not going to add up utilities and that sort of thing, or insurance payments to or let's say what's something else? We wouldn't add up your phone bill, for example. Now, housing expense plus all other obligations divided by your gross earnings is what's called your back-end ratio. And historically, that should have been somewhere in the high 30s to low 40s. Little sidebar, I may have mentioned this before, but it bears repeating. We got way too high. In fact, the average person is close to 80% before they get a modification, and in the low 60s after a modification. And if I've said it once, I've said it again. You're not doing yourself or anybody else any favors by maintaining a payment like that. It's not sustainable. And so if that describes you, and your chances of income going up are not dramatic, know this. On most modifications, the payment that you're making is temporary at best. In most cases, it will go up. And if your income is not going to go up commensurate with that payment increase, you've just postponed the inevitable. Now, most people don't tell you that, but I'm here as your advocate to make sure you clearly understand that you need to confirm that a modification is in your long-term best interest. I'll make sure you understand how to fill out an income and expense declaration and who's going to do it for you to make sure that you are fully taken care of in the next video. Thank you for watching.